Hello and welcome to another episode of Fintech Focus TV with me, Toby Babb. I am absolutely delighted today to be joined by Rob Johnson from Coremont. Rob, how are you?
Yeah, we're good, thank you. We the real we.
Yeah, always a good way to start with it. And back at home today, I hear there's been a little bit of venturing back into the office, and but back at base at the moment. Before we go into all of that and how you're dealing with COVID and how the business is going, let's just get a little bit of background. Tell us a little bit about yourself and a bit about Coremont, if you would, because it's been an amazing story, hasn't it?
Sure. So my background was forever on the sell side, and then I moved over to the buy side. So it's been an interesting transition for me. Coremont is an old new company, or a new old company if you prefer. We've been in stealth mode for a couple of years, up to the point we reached MVP with our UI in February this year. So if you look for us on the internet, it just said, "We are Coremont, go away." Very little out there. The big picture is we are a front to back, soup to nuts suite of services for asset managers. That's what we provide. We can trade and settle every global asset class. We can price, model, risk management, all of that, really soup to nuts. We're especially strong around the more complex products with strong capabilities in derivatives, FX, fixed income, equities. But we also have the full operational and investor support structure that people need. I say asset managers, but most of these propositions are equally applicable to the sell side. But we come from Brevan Howard, which is where we span out of in 2018. And we've been in stealth mode principally because we've been trying to develop something that can be geographically diversified, so we can attract prospects across the world. And to be fair, we now have clients in as far as Tokyo in the east and California in the west. All this while in stealth mode, I should point out, trying not to advertise or pick up any clients. So that worked.
Tell us about the stealth mode. What was the thinking behind that?
Well, okay, so it's if you have a great service, and let's face it, Brevan Howard has been developed for many years as a massive macro manager, and you develop really good processes as a result. Now, we've made mistakes along the way because we've been making decisions. And as a result, you end up with a tried and tested set of processes. These enable us to execute in a resilient, robust fashion from top to bottom, right? So that's what enabled us to spin out Coremont from Brevan Howard in 2018. The roles and processes were clearly defined, robust and resilient. And that's what makes our BPO, or business process outsourcing, whatever it's called nowadays, model tractable and credible. But that's fine if you're geographically co-located with your traders and portfolio managers, your risk managers, et cetera, et cetera. If you want to address a geographically diverse set of prospects or clients, then you need to build something. It's not, if a lot of firms are still quite spreadsheet based, and it's no good if somebody's spreadsheet breaks in Tokyo if you happen to be in London. So we took a look around the marketplace at what the most sensible options to build would be. And we ended up building a back end running .NET Core, a front end running React, and all hosted on AWS. Right? So this gives us a very light browser-based UI with a highly scalable, geographically flexible back end. And this product constitutes the portal through which we deliver all of the firm's services. Now, those services have been around. That's the business process. And very briefly, they are 5 pillars, right? Two pillars at the sharp end, 2 pillars at the blunt end, 1 in the middle, gluing them together. So at the sharp end, you've got the portfolio and trader management stuff, our new Clarion UI that services that. You've also got risk services, VAR, stress testing, counterparty exposure, all the usual stuff. At the other end, you've got regulatory pillars, legal and compliance, and you've got investor relations. And in the middle, there's all the operations stuff, the trade processing, fund accounting, and treasury. Now, like I said, geographically co-located, great. You walk through and you talk to the trader and you say, hey, your risk, why is your risk like this, or what's going on? We had to build a portal that facilitated all of that. And that's what took the best part of 2 years.
It sounds like it's been quite a journey as well.
Absolutely. We, as I said, we went through MVP in February, and we've actually proven that this works because we've got clients in Tokyo, clients in California, and all points in between. And we're onboarding selected clients at a rate of knots. It's a growth thing because we started with only 90 people and we've been growing organically over that period. We're around 150 now.
Yeah.
We're also based in not just London. We've got Hong Kong now, and we've got New York, well, Greenwich, Connecticut now. Because the other thing is, when things go bad, we're not a software provider. The software underpins all of these 5 pillars to a lesser degree, but you've got to be able to pick up the phone to somebody if something doesn't look right. So we actually have quants on the phone. So it's not software. We're not selling. We're not plugging software. It's us. Cool Tech is a portal that facilitates our service delivery. And that's what's interesting from my perspective, is that this was an opportunity to come from a big global bank into something that was cool, entrepreneurial. And I could see that the business processes were all there. It just needed the cool tech adding. And that's what made it really cool and interesting for me.
It's an interesting thing you say there, because it's from what I've seen, it's been very much the sort of benchmark of Coremont's been able to attract, as you say, with that sort of growth, some really very, very strong people. And whenever we've done with our Financial Technologist magazine any sort of real deep insight into what makes a company attractive, a load of it is the real purpose of what you're trying to do, how you're shaping the industry, changing the industry. But also a big theme that comes back from every time we sort of talk to people out in the industry and do surveys of what people are looking for. Cool tech becomes very much the cornerstone of something that people want to have, that sort of skill set. They want to be able to improve their skills, improve their odds. Tell us a little bit about the sort of scale of the tech and what makes it cool. What stands out?
Well, when I say cool, I don't want you to think this is bleeding edge, could break at any minute stuff. What we just looked around for was best of breed, really. And I mean, cloud is old news as far as I'm concerned. It's just a done deal. There are still people out there that think that it's all really new and scary, but you just have to be sensible. There is an argument against going all in on one vendor, but provided you containerize most of your products and most of your systems, then you get at least a degree of flexibility to be able to migrate between vendors. The React front end was an obvious one. It's kind of looking at the marketplace, seeing what works, what's good, and critically, where can you go and hire good people? And there is a groundswell of good C# developers and good React developers out there. And AWS is highly available. We haven't had an outage, touch wood. So you get all that resilience built in. There are a number of caveats that I would throw in around if we're talking about if I was doing this again, there were a few things that I would do up front, obviously. But the tech side of it, if you go fairly generic with your implementation, you can get that kind of ability to migrate between clouds. Then again, do you really need to? How much do you trust AWS, one of the biggest firms in the world? There was a day when you never got fired for buying IBM. It's kind of now AWS is almost in that kind of situation where you just know it'll work. So while it's cool tech, yeah, it's cool insofar as we've done a lot of re-engineering and we picked best of breed. But we haven't gone out there like back in my university days. It'd be like, hey, what could I really love? What would I really fancy playing with? No, I haven't done it in Go, for example, because Go engineers are quite hard to hire, and then you're tied to Google. We've just looked at what makes sense. So it's a sensible, solid, resilient build that we were looking for. Again, it's facilitative. It's about delivering service. It's not about building something cool. We didn't go and build a cool tech and then try and find a market for it. We looked at our services and how we deliver them. And it happened to be that it's quite cool tech.
Well, that's one of the key things, isn't it? Look, I think there's a misconception sometimes about what cool is in tech. I mean, is it, you know, flashing lights and you know, the next big thing, and all of a sudden you've got, you know, the issue of who you can bring in to deliver that. There's a you know, huge misconceptions about that, and there's so many. You know, there's sort of a sort of catastrophic backstory of companies there that have tried to be the next big thing using cool technology, but not being able to have the people to support it. You've looked at something there which is, you know, what's going to deliver the best service to our customers, and what's going to allow us to attract the, you know, the very best people to our team, right? That seems to be the sort of strategy.
Sure, and interestingly, we have been able to hire some very good quality engineers. The market has been quite good for us at the moment. We've been hiring all through lockdown. There's a whole bunch of people. In fact, I was supposed to go in Wednesday, but I can't go into the office Wednesday now. So we were having a meet and greet for new hires, a lot of which I've only ever met on Zoom. So that's a bit of a challenge for us.
It's funny, isn't it? I mean, speaking of that, with regards to meeting people on Zoom and onboarding as you have all the way through this, has that been a challenge? Has that been better than you thought? I know you've been traditionally an office-based person, haven't you? What have you found from all this? So
when we set the firm up, I had an open mind, open-ish. I was very much an office-based person, and I said I wanted people to come into the office for the first 6 months of their tenure, so they understood us, we understood them, and there was a building of trust there. Now, after that, I would consider working from home for people. What's actually happened is this events have actually coincided quite nicely, which 18 months into my time at the firm, this has all happened, and we are all working from home. What I've discussed, and actually we went 100% working from home ahead of government guidelines. What's been interesting is how well it's worked in terms of not just onboarding new staff. Now, let's face it, to be fair, while I've talked a lot about our services, probably 2/3 of the firm are technologists. Okay, that's the nature of the beast. Technology is actually quite human intensive to build. That's the weird anomaly of it. The onboarding process works well. Technologists tend to work quite happily remotely. What is interesting, most interesting, we haven't had any outages. We've had the highest trading volumes ever in the marketplace, no issues. So I've just been totally impressed by how well it's worked, and it kind of is the new normal. So what's more interesting is around our delivery cadence. Now, we no doubt there are firms that consider like BCP, DR to be live support only, or at least for a significant period of time. So new development takes something of a back seat for some firms. I have a number of metrics that enable me to look at and gauge how the teams are working, including GitLab stats, product releases, right the way through to how our non-production AWS infrastructure costs are looking. As an aside, each time developer issues emerge to trunk request, a new AWS test environment gets spun up, runs through our regression test pack. So actually a drop in the non-prod AWS infrastructure costs would correspond to a drop in development activity. Interestingly, all the indicators I've seen suggest that our product development levels have been maintained 100% plus while working remotely. In truth, some staff actually prefer working from home because it cuts a couple of hours off their traveling each day. So for some, that productivity is actually increased. That's the weird anomaly we're seeing here. That's not to idealize the situation. A few people are popping back into the office for odd days here and there, but we remain at the moment, we're largely working from home. Having said that, we're all human beings. even the Perl and Scala developers are human beings, so that there is some value in face-to-face communication. We've clearly proven that our processes are well defined, and they transcend the requirement for geographical co-location. But that's what makes our BPO tractable right now, is that it just works.
Yeah.
We've got a return to office policy, but the best we can realistically hope for is to tie that to the government guidelines right now. Otherwise, we'd be rewriting it every week. In reality, most folk are probably happiest doing a mix of office and home working. There's value to getting teams together on a regular basis, and we have daily stand-ups for all the teams over Zoom. But having a weekly face-to-face would be better still, personally, I think.
Yeah. And is that the future for you guys? Do you think you'll go back to that sort of hybrid model, or will everyone come back in over time, or what's the plan?
I think everyone will come back in for some time, yes. But whether people will go back 100%, I think that there will be a degree of kind of flexibility around that.
Yeah.
It's not the same for everybody. If I had to pick a single thing that was affecting the smooth running of the business day, then it's not actually technology related, it's small children. There's a full-time job. Fortunately, I don't have any small ones, but managing a full working day with a toddler in tow is quite a challenge. So for some people, they're quite keen to kind of compartmentalize their day. For other people, it's fine as it is, and they're highly productive.
Yeah. There's a lot of change that's sort of positive change that I think can come out of this as well. You mentioned something before, just to sort of change tack slightly, where you mentioned that cloud adoption is just there now. I think it's probably from what I've seen and doing 50 of these over the last few months, there's been a lot of talk still about a laggard effect, and how I think you've probably seen the same sort of headlines about digital transformation and digital innovation happening at greater rates than ever before. Cloud adoption, speaking to cloud companies fairly regularly through this, and their rate of uptake has been phenomenally increased over this sort of period, with 300% growth over the lockdown period for many companies in that. With the initial comment there about the sort of cloud being already de rigueur and embedded, but this phenomenal rise of cloud-based businesses who are gaining that adoption and speed of digital innovation and adoption within banks in particular, and financial institutions across the asset management stage, where we've probably seen a little bit of lagging still compared to the commercial world. How do those two sort of theories collide for you?
Sorry, I'm not quite clear. You mean that there are some laggards and...
Absolutely. Sorry. Yes. So with it, I think your comments there about sort of cloud being very much part and parcel of what's happening. It's already here, and a number of companies still now adopting and suddenly panicking a little bit and evolving and saying, right, okay, let's really invest in cloud technology now. It's almost a sort of slight friction, because I understand it from my perspective, both sides of that story. I think cloud is and has evolved tremendously over the last 10 years. It is and should be part of almost every. You see the huge rise of SaaS-based businesses and everything around that. Yet still there remains a fair amount of growth in it, which means it comes from somewhere.
Sure. There are clearly some firms that are struggling to adopt this. Now, look, cloud, like we're proposing that we're a banking stroke financial services utility. Cloud is just another utility. It's about providing compute services, storage services, and offloading that. I have a generator in my building, but really, I don't rely on it for my daily work. I rely on, the electricity board. So I think the main issue that we have, or some firms have, is actually legacy tech, right? So it's not necessarily the fact that they don't want to move to cloud, because there are many benefits of doing so that have been played out endlessly. I think it's around the cost of lifting and shifting, or the various different mechanisms of moving to cloud. And if you look, I know historically banks have had a big challenges over the last 10 years with regulation, which has had a knock-on effect to their tech budgets, which means they've got quite a lot of legacy tech out there that is rather challenging to move. So it's more about not hearts and minds so much, I think, as the cost associated with migrating. Now, we still have some on-premise products. I don't want to make out that we don't. We have a trade lifecycle management application, which is a very well-known third-party vendor. And this is one of the big challenges, is that your third-party legacy kit, you're at the mercy of the vendor there, because until the vendor migrates, you have two options. One is to ditch it and migrate off to another application,
That's expensive,
which is expensive and a huge lift and can take a long time. Or you have to wait for that vendor to migrate to cloud. And some vendors are being a bit cheeky about this, because there's a lot of customer lock-in with some of these products, and they will actually charge you more, try to charge you more for the cloud version. It's like, guys, actually, our alternative is to leave you and move to another product that is cloud ready, or do quite a lot of lifting for you and facilitate the migration of your product to cloud. So it's quite cheeky for them to do that, right? But that is the issue. Now, you can mitigate it to some extent, as we do. We run hot across geographically diverse data centers where we have any third-party applications, but we are also constantly monitoring all our remaining applications, and there aren't many, to be fair, that have to remain on premise. Everything else we've Dockerized or containerized. Containerized is the right thing to do here. Anything you build in-house, just as an aside, containerize it. That way you avoid built-in obsolescence and more technical debt on your in-house development. That's the last thing you want to be doing, is adding to your pain. And then constantly monitor the third parties so that you can encourage them to migrate. And then you've got an option.
Yeah, I think it's some really interesting stuff that's evolving with it. I think there's another aspect that's interesting with regards to how you, yeah, as you said at the sort of top of the show, that you've moved over from the sell side to the buy side. Are you seeing tremendous differences? Are you seeing stuff that you can take over? Are you learning stuff from that's different on one side of the coin to the other? Talk us through your transition, because I think it's interesting, because we are seeing more and more of this happening, right?
Yeah, look, so I mentioned those 5 pillars earlier on. With the exception of investor relations, perhaps, they are common. There's a massive correlation between buy and sell side. It's to be fair, Reverend Howdo's, where we came from, they are a massive, or were and still are a massive macro manager. So they were the first to have to do initial margining with sim calcs and that kind of thing. So a lot of those aspects are common, and obviously sim calcs for initial margining are very common across the sell side, but we've dealt with them as well. So there's not like secret sauce on either side. I've been hiring people from both sides because fundamentally technology is technology. It's highly common, and most of the processes, to be fair, are the same. You in risk, you've got VAR, you've got stress testing, you've got counterparty exposure, liquidity risk, model risk, P&L attribution, cash management, settlement. It's all the same. There may be more regulatory reporting on the sell side. And to be fair, I lived that for a few years, and it was pretty horrible. But it's catching up with the buy side too. There's going to be more. But everything else, the pricing, the risk, the execution, trade life cycling, all those transactional elements, identical, pretty much. So in fact, pretty much all sell side activity falls into those pillars. So yeah.
What would you say? What would you say the perks on the buy side or sell side, or would you say there, you know, from what you just said there, much of a muchness? But if you were to, you know, if you were to advise someone who's sort of, you know, looking to move one way or the other, you know, taking, you know, your experience as opposed to your current sort of predication to the buy side, should we say?
Yeah.
How would you be steering someone at this sort of stage? Because I think it's a really interesting sort of point for people right now, isn't it?
Okay, so there are benefits to both sides. Differences. The buy side is probably a lot more entrepreneurial, and individual firms are smaller, so you get much greater exposure to more facets of the business. If you go to a large monolith bank, you're going to go into fixed income, you're going to go into equities, you're going to go into some division, and you'll die there. That's not necessarily the case, but you know, there is some flexibility. It's a lot more. There's a lot more process and committees and that kind of thing in a large organization. So this is not necessarily a buy side, sell side split. This is a big tech, big finance, small finance kind of environment. So it can be a lot more agile. That's why we could go, okay, so we're going to do this and let's get on with it. And you can have a conversation with a few people rather than having to wait for several committees to agree it and it taking several months. Our turnaround time can be a matter of minutes on a decision, whereas that's not necessarily the case on the sell side. On the sell side, though, if you're a new entrant to financial services, you may get a more structured career path. You may get more rope. And you may get more opportunity to spend time on a specific thing. It's, like I say, less about delivery, more about making sure everything is in the process, developed in the right way. That's not to say that we have strong processes. We started off, we've never done waterfall, but we started off Scrum based. We moved to Kanban. Now we have more than daily releases on on many of our applications. So that's the kind of transition we can do, is that we went, right, this could be a lot better. We had a fortnightly delivery cycle, and then we went, well, actually we could just deliver every day if we needed to. And actually on some days we deliver more than twice a day. And in some cases now we're actually looking at continuous deployment. So as I mentioned earlier, we spin up a test environment on AWS, run the regression tests. Some components can be auto deployed. We do blue-green deployment, so we never take the application down. All these things we can just do. We've just rolled out. We're just about to roll out multi-factor authentication. It's already been running with most of us in-house for a period of time. We decided to do that within a day. That's how long it took to have the conversation and just get the project started.
So this agility is a major sort of benefit to it, isn't it?
Absolutely.
The exposure, the agility,
yeah,
that entrepreneurial aspect, which I think is really attractive to people right now, right?
Having said that, we still have to do all the sensible things like I mentioned, multi-factor authentication. The first thing before you roll it out is you have to do cybersecurity penetration testing on it and all these sort of things. So you can't just take something and whack it into production. You have to have all the policies and procedures followed. But the trick is to make sure that that bureaucracy works for you and doesn't work against you. And I think there are tendencies in big companies to take a one-size-fits-all to approach to development procedures and that kind of thing, which may not necessarily suit all applications. So we can be a bit more sensible, I think, about it and apply the right kind of technologies and the right kind of processes and procedures that fit each application.
Yeah, It's an amazing sort of scenario. I think there's been such evolution, I think, in that buy side world, and the exposure, and I think it's been quite liberating to a number of people who've made that transition across, and seeing, as you sort of intimated earlier on, the sort of shackles being lifted a little bit to be able to do, well, we've overused the word a little bit, but cooler things is really is really interesting. I'm going to finish with one question which looks forward. You mentioned there about sort of how things have become a little bit more normalized and how you move further forward. And you've sort of intimated that this isn't about just trying to be on trend, but actually provide real value to people. We've been through a turbulent phase that I think in the financial sector and the tech sector in particular, we've had less impact than so many other places. But if you're there to say, right, okay, here's a positive legacy, here's some opportunities, and this is what we can really do better and emerge stronger from it, what would that look like to you?
Well, there's been a number of learning points from not just these last few months, but more the last year or two. BCP is just normal, right? The best test you can have of your BCP is to do it and to run with it. And we found it just kind of works, which was great.
Yeah.
You have to look at things like you need to have geographically distributed endpoints to jump off to cloud. So you shouldn't be dependent on a single place. Now, obviously, big firms have this. We used to have many data centers. Actually, we've massively reduced the number of data centers we have simply because we don't need them anymore. But we still have a couple of data centers out there, plus an office, plus this, plus that. We've learned to containerize everything, as I mentioned earlier. What we've also learned is that your cloud service providers' availability zones are generally, they're a cluster of data centers. So you've already got that localized resilience and redundancy. You can consider multiple availability zones if you want further resilience. That's all possible. A couple of key things that we did, which were really fortuitous, I think, are around the organizational build. First off, we used a third-party consultancy to help us to develop our in-house teams. Now, some consultancies are pure body shoppers. They're only concerned with getting as many bodies into your firm and to maximize their profits, essentially. So some, however, will work with you with the explicit goal of facilitating a longer-term migration in parallel to your development program. So that enables you to build out the development of your in-house team. And we've done this, and it also gave us a sounding board for a lot of, not just technology, but they help with our interviewing processes and that kind of thing. So again, not COVID related, but it gave us a good grounding and other people to help. The other one is obviously, and don't try and build everything yourself. Don't let your server side engineers build your UI unless you really like primary colors. That's not employ a UX designer, for example. Go to a third party, get their help, get their support in this.
Yeah.
The other thing is, other things, watch out for snake oil salesmen who suddenly appear and have the answer to all your ills. These people.
There's been a lot of those.
not just recently. I mean, let's face it. Back in the early days of cloud, and I go way back with it, right back to the early design phase of AWS, not AWS, Azure. Worked very closely with Microsoft on that. But fortunately, there's been snake oil salesmen in cloud forever, right? And they're still around. Fortunately, most of them have moved on to be digital transformation specialists now, having briefly spent a bit of time as a blockchain specialist.
Yeah.
Find someone who's done it before, right? Or at least something similar.
Yeah.
Is old news, right? There's plenty of expertise out there. So go out, talk to people, go to meetups. There's lots of meetups online now,
Yeah.
still running. There's people out there who've done stuff. It's great to talk to people, even if it's over Zoom. And the other one is all right, people are at home, let your staff take online courses. There are loads of free courses out there. With cloud, you still need network engineers, you still need DBAs, you still need developers more than ever, but you actually need them with augmented skill sets. So make sure your team are aware that there's trainings available. Most of it's free, right?
Mm.
The critical thing for us as managers is to make sure they have the time to take it. So
Yeah.
that's another one.
How have you managed that? I mean, you know, there's increasing pressure. There's people there who, you know, we've heard about the sort of productivity issues where people are sort of, you know, because they're not there and being seen, they like to appear to do more, and suddenly it sort of overtakes life, etc., etc. People don't want to just sort of be seen to be, you know, watching online videos during core hours. How have you managed that?
Okay, so again, it was fortuitous timing. We had a very strong core of our staff in place. Many people at the firm had been at the firm a long time, to be fair, but we had the opportunity to hire early. So most people have been with us at least for several months, but in some cases, many years. So there's a degree of trust there. I mentioned previously, we have a number of metrics around delivery, but we also have a daily stand-up with every team. Every team has a stand-up. I try and drop in as many as I can, but I've got like half a dozen in the morning, back to back. Today I did none of them because I'm so. But yeah,
I appreciate that.
We try to make sure there's lots of FaceTime for individual staff. And yeah, if you are at home, there is a lot of pressure to be continuously at your desk. My fitness regime has gone through the floor in the last 3 months because you're always on, you're always there. But I'm not traveling.
You're looking all right, Rob. You're looking all right.
Thank you very much. You too. You too. But nobody's traveling into the office. I spent an hour and a quarter traveling most days each way. So, you know, that's opportunity. People need to they need to need to be told that it's okay to carve out time to develop your skill set.
Yeah. Well, look, it sounds like there's some really exciting stuff going on there, and I feel like we've barely scratched the surface. So there definitely needs to be a part 2 of this conversation, which I shall get booked in the not too distant future as well. But look, I'm conscious that there's going to be people here who are watching this who are really interested in what you're doing, from Tokyo all the way across to California, from, you know, buy side, small and large. Who should be talking to you, and how do they get in touch with you?
We've got a sales team, an investor relations team. Basically, people are available. Our website has links, and we have a LinkedIn presence, and it's growing at the moment. It's in its early days for us because we've been busy
moving from stealth. Yeah.
So, but yeah, we have plenty of people available. We've actually hired some salespeople. Who knew?
Look at that. And that's always an interesting process, isn't it?
From a technology perspective, you know, I can be found. It's not that difficult. Any technologist that can't find me on the web isn't trying. But please, anyone who's a digital transformation specialist or a blockchain specialist, don't connect with me on LinkedIn.
Well, I think there was a huge explosion of them, and we're seeing them slowly filtering themselves out. Those who remain might actually be specialists. You never know. Yeah. Rob, listen, it's been an absolute pleasure talking to you. I love you know, what you guys are doing. It's been incredible to watch over the last few years, and very much wish you the very best of luck for the future. So thanks for joining us. I'd love to do another one with you and sort of explore a few of these other points that we've only just scratched the surface of so far. I think there's a big piece about globalization and the lessons you're seeing from all over the world, but these half hours seem to just disappear like that, doesn't it? And I know we've overrun already, so we'll catch up more on that soon. Thank you all for watching, and we'll see you soon on another episode of Fintech Focus TV. Rob, thanks ever so much.
Cheers, Toby. Bye.